This is Smart Investing with Mike.wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike.wren.
Well, hello, everybody. You are listening to another episode of the Smart Investing Show. I'm Mike Wren, your host. My producer extraordinaire, Mr. Chris Martin, is across the table from me as usual. And this is the show where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every show. Thirdly, we try to be entertaining. And like I said, producer extraordinary, across the table. He's the entertaining part. So, be entertaining, Chris. It's your, you wanted it. No.
Hey, clown, tell us a joke.
Yeah, tell us something funny. It does not always work out. Isn't that always a good segue?
Yeah, it's always great.
Go from ice cold to, okay, make us laugh.
Make us laugh.
So anyway, yeah, today's a nice Friday, rainy, before the Memorial Day weekend.
Wonder a weather alert, apparently, from morning news. Because we never get rain. I don't know. I didn't understand why it's an alert. We always get rain.
Well, maybe we'll get, maybe it's warm enough that we'll get thunder and lightning later today or something. I think the weekend's supposed to be pretty good, though.
I don't know.
You don't care.
I don't care. Yeah. I wake up. Oh, that's what the day's doing.
Yeah. You're like my dad now. You've officially said the same things as my dad.
I've crossed that line, huh?
Yeah.
All right. I guess there's going to be clouds today.
So anyway, today's show, we can talk about anything. This is one of those shows where I would purposely try to drive Chris nuts if we were on the radio, and I would say out in the airwaves, today, tell us what you're working on in your shop. And Chris gets this, he rolls his eyes, gets this, he kind of sinks his head, and it's like, oh God, nothing but car talk all day. But since we're not on the radio anymore, and it's not live, I can't do that to you anymore. It's no fun.
You know what came up in my Facebook memories yesterday was this was officially the last week that we ended the show on KQNT.
Yeah.
I think it was. So yeah, this week.
How many years ago?
3.
Just 3? Not 4 or 5?
No,
okay.
Just 3.
Okay. So that's okay. So we must have 2.5 years worth of podcasts out there somewhere. Or maybe
oh, yeah.
2. Yeah.
Oh, yeah.
Oh, yeah.
They're out there.
They're sitting there.
They're out there.
Getting mold on. Aging quite well.
You know, it's not like you go back and read a good book. I wouldn't go back to like episode 2.
No, because doing a podcast is way different than the radio show, because sometimes Chris and I were just dealing with people. And of course, that's entertaining itself. Because you know, when you're on the air, everybody in every trailer court in the area gets to listen for free. That's inevitable truth. I
think it was it Daniel Tosh or something was doing a concert, and he charged $5 a ticket, and they're like, how come $5? How come just free? He goes, you really want to sit next to some guy who got in for free?
Exactly. That's a very good point. So today's show, I did not look at any magazines to do today's show. I didn't watch the TV. I was just trying to pull what was ever out of my head, what was ever in my head. You know what I mean?
Yeah, wrong side of the body. I thought you were going to say, but all right.
Yeah, no, that's when I don't have notes. That's the other side of the body. So today's show, I'm going to just cut to the chase. When we're dealing with investments, let me tell you something. I never panic into or out of an investment. Okay? I'll say that again because it's a big deal. It's going to become bigger than you realize. I never panic into or out of an investment. And what I mean by that, I never get so much fear about something that I own that I just have to sell it straight away. And I never get the fear of losing out where something's gone up so much, it's like, oh my God, if I don't buy it now, I might not ever get to another chance to buy it. You know, whip myself into that lather and then buy it. I never do either one of those things. I make the occasional mistake by buying or sometimes by not buying a good company, but I never panic. And neither does Warren Buffett. And that is a huge issue. It's so big that besides saving money and living on less money than you make and paying off debt and doing all of that good, I call it, good money exercise, what I just told you is the most important thing, not panicking into or out of an investment. And I've said it before, to put an even finer point on it, the Dave Ramsey radio show out there, I think it's a good one because it talks about the exercise, the daily effort of money management and personal finances. Money management, that's the wrong way to say it. Your personal finances, saving, paying off your bills, living on less than you make. That advice always works. Okay? That's what's genius about it. It always works. There's always a good outcome. There's never a bad outcome from doing that. And so that's how come it can be so empowering to some people when they listen to it. And that's how come he, frankly, can be so kind of high and mighty a little bit, because it feels good when you're giving that kind of advice because it can't be misconstrued. You see what I mean?
Yeah, I was thinking, like, you always get to that point in your life where you know something, like it could be like coffee mugs and somebody asks you and you have that thing about you where you can just go, I'm going to speak about this and you're going to listen because I'm smart enough now.
Yeah. So that type of personal finance management is important. And if you don't do it, unless you inherit a big sum of money, you're never going to be an investor because you're never going to have extra money. So you need one before the other, but, they kind of don't go together. There's a different step in there. The different step that Warren Buffett never really talks about, that nobody really ever talks about, is the fear factor, the fear of losing out and the fear of losing. Those two things, if you can control those, you'll be successful investing. Because if you're rational enough not to scare yourself out of something and to scare yourself into something, well, what's that prevent? That prevents you selling in a panic selling mode. When everybody else thinks the world's going to end and you don't think the world's going to end, there you go. You just protected yourself from a huge money-losing situation. Also, if you are not going to panic into an investment, if you don't have such a huge amount of big fear that you have a fear of losing out, well, if you don't have a fear of losing out, I think somebody offering you a Ponzi scheme isn't going to be successful because you're not going to bite on that carrot. You're not going to say, oh geez, that's almost too, I don't want to miss out on that. You're not going to invest in some fly-by-night cannabis company that just had some, weird IPO come out on the Vancouver Canadian Exchange. Not the Toronto, the normal one, the Vancouver one, which is like, Wicked Wild West at the OK Corral. You're not going to do that. You're going to be more reasonable. You're not going to have that fear of losing out. Well, hell, if you avoid those two things, you're pretty darn good. Okay? It's the most important thing. The most important thing. So when you hear anyone talking constantly talking about indexes, asset allocation, factor investing, anything that focuses only on the investment itself, or anyone that's talking about focusing only on the investment himself, they are missing the weakest link in this scenario, And namely, that's Warren Buffett as well. Warren Buffett is always telling people, I would just invest in the index and let it go. Well, the problem is, Warren, people aren't you. They're not going to just let it go. They're going to panic in and out of whatever thing that you just told them to do, whether it's an S&P index, whether it's any index, whether it's the best thing in the world. They're going to panic out. So Warren Buffett is missing the one key factor, talking about the weakest link in investing. Anybody on CNBC that talks about the investments continuously, just the investments. My competitors that talk about how they're so successful with their clients, okay? They do this, they do that. They are not addressing the weakest link. Can you guess what the weakest link is?
I'm just going to automatically say people.
Right, you. The person in the mirror. You are the weakest link. It doesn't mean something bad, it's just a fact. The reason that I can say that so definitively is it's just as true as that advice that I was talking about with personal finance a minute ago, where when you pay off your debt and live on less than you make, it always works out. It's just an inevitable truth, okay? Another inevitable truth is that we are all human. We all have our weak moments. We have our weak days. We have our weak times. We have weak events. We have weak topics. There's things that kind of kick us off, get us off kilter. Something that's negative.
Well, isn't it kind of you start to live in your own bubble?
Maybe.
Like I can't believe some people don't watch Marvel movies. It's unfathomable to me.
Yeah.
But then some other guys like, well, those are stupid. I can't believe you don't know who drives the number 5 car. And it's like you get into your bubble in your own world and you don't quite understand why everybody else thinks a different way. Because you're always surrounded by the same thing.
Yeah, and I think with that most people have their own bubble, and some of them are really small, like their parents' basement. And some of them,
like their trailer park.
Yeah, and some of them are bigger. But everybody has their own thing, which again makes them human. So all of us, anybody listening to this podcast, all 4 of you, you've got something that can make you have a bad day. There's some event that can make you have a bad time, right?
Well, it's like the investors you were talking about. They only talk about people. Well, they only surround themselves with other investors. They lose track of the people that...
They lose track of people.
Yeah.
They're only talking
regular
about...
people.
No, just any people.
Norms,
yeah,
I like to call them.
Yeah, everybody's normal. My competitors are normal. You don't think that what they offer their clients is some manifestation of what they're scared about themselves? It totally is. That's why I've said, when I used to pound it hard on the radio, my competitors are not dishonest. They are not bad people. I would imagine that they'd be perfect neighbors, perfect friends, perfect relatives, maybe not perfect, but really, really good friends, neighbors, relatives. But that doesn't make them a really good investor. It doesn't make them solid enough mentally and solid enough, but maybe better said, emotionally, that it makes them a good leader of other people trying to do good things with their money, because they're just as scared as anything else. So it kind of multiplies itself. If you've got one of my competitors that hasn't squared themselves away with fear, they're trying to cover up their own fear with some sort of investment product or vehicle or strategy. And they are trying to do that same thing with their clients instead of just addressing the weakest link, which is them. Sorry for the phone. There we go. Which is the weakest link is them or their client. Me, I don't know why I don't know why I was made aware of this so early on, why I came to the realization, but I could easily see, one of the first things that happened is even before I became what you call a stockbroker and investment advisor, I was in accounting doing the payroll for like 80, 40 to 80. I can't remember because it's been so many years, but several other reps, several other brokers in that firm that doesn't exist anymore, Murphy Favor. And I had to deal with them, on a weekly basis, a little bit monthly. And I could see the different personalities of these guys. And I saw what they made. I was the one that calculated it. So I could see different personalities, and sometimes the amount that they made, the personality that you thought that they had, you would think would negatively affect their pay, and they actually were doing well. And some of the other people that you thought, wow, I bet you they're going to be doing well. It's like, no, they're just Midland. And it never,
or lucky.
Yeah, it never made sense to me. It's like, what's going on here? So, I was starting to think about the human side a long time ago. And after, being in the company of psychiatrists, psychologists, doing a lot of reading, well, I realized that, human beings, we're hardwired to do a few things. For example, I've said this on the radio before. Humans are hardwired to notice patterns, because if you know a river that floods all the time, well, you're probably not going to you're not going to pitch your tent or build your homestead on the corner of the river that floods the worst. You'll go someplace else. In a backyard, there's a shady spot where stuff won't grow. Well, you'll finally quit planting stuff there when it won't grow, and you'll go someplace else.
We're creatures of habit, and so we seek that out.
Yeah.
I mean, just a simple, if your TV show starts 10 minutes later, you're a little freaked out because it's supposed to start at 8. Well, how come it didn't start at 8?
Hold on.
So we're always looking for patterns.
Did people realize that Chris just said freaked out?
Freaked out
about a radio show? I mean, a TV show? I'm just teasing.
I listen to other podcasts, and this one guy, and it's really stupid, like during this little intro segment, he always just goes, blip, 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 blip. And one day he didn't do it, and he got people that called up. Yeah, you didn't do that thing. It's like just something stupid like that. But we need patterns. We need certain behaviors.
You want to up the ante on that?
Sure.
Just add money.
Yeah, that's true.
Oh,
and not just
my gosh.
$10, but like a lot of money.
Yeah. How about your whole life savings? Oh my God. I think we just ratcheted up the emotional quotient by a factor of gazillion.
That's all my money, and that's not acting the same way as it was yesterday.
Yeah, I think I'm going to crap myself. Yeah, or do something. I need to do something about it. So
that's right.
Yeah.
I need to make it back to normal.
So just imagine that. We're all human. We all have something that we're not good at. Not that we're good at, the things that we're not good at. We all have a little bit of anxiety. Maybe it's needles. Maybe it's money. Maybe it's, I don't know.
Cars. Maybe you don't know cars.
Well, you know what I mean.
Yeah.
So that makes us human. That's to be human means exactly this, and much more, of course. But when all of these flippant comments, oh, you should just do this and everything will be okay, or the journalists, when they'll write an article, it'll just be okay, they haven't a clue. They don't realize that they're not talking about you, the person. And frankly, even though we all have that lizard brain and we all have something that can set us off to start thinking bad about ourselves, well, it's always something. Even though we're wired so similarly, a lot of times it's like different trigger points. Okay? So even if you're an extraordinarily good psychiatrist or psychologist and you were to write a book about, what freaks people out with money, well, there's a lot of things are the same, but if you look at that tree, the main branches inside of us and emotions tend to be all, not all the same, but very similar. But when you get out on the very edges, what sets you off? Well, I think there's a lot of little different things that set off a bad chain of emotional events. And
that sounds like a whole lot of hippie talk, Mike.
I know, man, but it's true. It's true. And people don't like talking about it because it can't be talked about in a soundbite. There's no beginning and end. People are used to a sales process. Here's what I got. Here's the features and the benefits. Here's the price. Yes or no. That's a sales process. Investing isn't that. But that's the only thing that people for many, many decades equated it with. It's a sales process. Am I going to buy or sell this? Blah, blah, blah. Boom. And that's how come I keep going back to the individual owners of small businesses, the entrepreneurs. They're typically so busy working their business, working their plan. They're so busy with daily activities and they're focused, it'd be another way to say it, that they don't get knocked off their stool by somebody. They don't get knocked off their stool by a weird news event. Their focus isn't broken by weird people shouting around them, different insane things. When you're in that focus and you're busy, you tend to be a little bit, you tend to have like a safety vest, like a bulletproof vest, let's say an emotion-proof vest. If you're busy making money and serving people at your business or shipping out product or whatever it is that you're doing and focused on, your lizard brain is focused on that. You don't have a hell of a lot of time to beat up on yourself, get scared, get mad, worry, anxiety. Your brain is being too active. Well, it kind of insulates yourself from it.
And that's your bubble. That's become your behavioral bubble.
So the entrepreneurs that are running their own business, their behavioral bubbles, they may not be good in other ways that I would not know about. But when it comes to investing, it sets them up for success. Because people can say that things are bad and this and that, but when they are constantly dealing with customers or something that they're selling, and they can see that people are their irrational emotions that they keep communicating to them, they don't buy it because they're busy. They're saying, well, if people are coming in and buying cigarettes and pop and beer from my 7-Eleven and gasoline, doesn't look like the world's ending to me.
Yeah. Have you seen the news last night? No, I'm busy. I'm trying to sell this, and I haven't had time to watch television.
That's perfect, Chris. That's perfect. So anyway, when I speak of companies and dividends, especially on this podcast, I'm not trying to paint a picture of I'm smart. I'm trying to help you, the listener, see the path. I'm trying to help you be less scared, to be comfortable. I'm trying to talk about these companies in a different way. Obviously, if I've read something that's got my dander up with competitors or whatever, I've got an ego. I'll try to get on here and say, look these people are...
The heck you say?
Yeah, these people are daft. Don't do that. But most of the time, even if it doesn't come across that way, I'm trying to make you, the listener, or the client in my office, comfortable, because I know if you're comfortable, you're not going to panic. And if you're not going to panic, I know that you're going to make money. And if you're going to make money, it's going to be a positive event, which creates a nice virtuous cycle, okay? That's what I'm trying to get to. So I try to paint it in that light. That's why I'll say a whole bunch of different companies like a shotgun and say, all of these companies are raising their dividends and blah, 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 blah. You can see that it's a very important point of the sentence, but the most important point that I'm trying to get across is your comfort. Why is that working? Or why would it work? Well, and here's why. And I hope that when I do that, here's another reason I'm doing it. I'm hoping that trying to make you comfortable and repetitive explanation, basically repetitive understanding, will help see you through the weak times. Because I think I've said it on the air before, out of all my clients, I think maybe only 10% are okay in a downturn, where they're completely emotionally okay.
What percentage would you say would tell you that they're okay?
Oh, like 70.
Okay.
Yeah. Yeah, I think truly, and it depends on the level of decline, because everybody has a different pain threshold. Okay? And of course, nothing about this is painful. Nobody's poking you, nobody's hitting you, punching you, but emotionally, we will use this word called pain that's not really accurate. A girlfriend breaking up with you, you'll say, oh, that hurt me. Well, she didn't really hurt you. You know what I mean?
Ah, she's a anyway.
Oh, Chris.
Sorry.
Boy,
Chris was just so off me.
Chris has a mean streak in him today. Where dear diary, what did Chris have for
I
breakfast?
told you I had a fight with a coworker this week.
Yeah, and Chris explained it to me, and it was hysterical because I got to see the look on Chris's face. Chris, it wasn't a fight with a coworker. You were frustrated with a coworker and told them to leave, or in such a way that they thought that they might be bodily harmed.
They thought they would.
Yeah, there you go. That isn't.
But then
fight.
HR told me, you know what? We know who you're dealing with, and so never mind. So
Nice HR. I could tell it's a bullet point for Chris. So anyway,
I apologize to my ex. Now I feel bad saying that.
so that's what I'm trying to do. Is you the client, you know, or you're the listener. I'm trying to get repetitive understanding, or just reminding you, repetitive reminding, just reminding you that this isn't a life or death scenario, reminding you that all of this lizard brain stuff doesn't help you out in this case. What am I getting back to? Like I started the podcast, never panicking into an investment or out of an investment. Okay? There's a difference between making a mistake where you can say, yeah, notice the emotional tone. Yeah, I did this. It didn't work out. It was a mistake. Or, yeah, I did this. I made a lot of money. I was lucky that time. Or I made this investment and, gosh, I can't ever see myself selling it because it's just so consistent. It's done good things. Contrast that with, I retire in something like 5 years. I retire in something like 2 years. Do I have enough money? Do I want more income? It'd be nice to have more income. Am I going to have to live on less than I'm making now? How many years do I think that I'm going to live after I retire to enjoy this? No, skip that. How many years am I going to feel as good as I feel now? And what sucks is I'm, insert any age. I feel perfect now, but I can't retire now. I can't not work now. By the time I maybe can not work, maybe I might not feel so good. And, I can't believe the president, insert any favorite or unfavorite president you want. I can't believe that I'm having to deal. I can't believe that somebody is making decisions like that. I can't believe that so-and-so did that to me. I can't believe that I truly can never really count on my statement coming and it not affecting me. This, you see how that, I can't believe that John across the street seems like he's got such a happy life. I can't believe that other people knew to buy this investment before I did. And that's a way different emotional tone. That, you're searching for something. A brain is searching for that kind of talk to end. You're either searching for worse news, so you can either take your fight or flight response, or you're searching for some reassuring event that will make that go away.
Well, I think when you say retirement, you're talking time's running out.
Totally.
So I either need someone to tell me something positive and then I'm worried about nothing, or negative, so I can just basically tell myself, I am smarter than I think I am. I'm screwed, but I'm smarter than.
And I can do something. I can do something about it. Yeah. The doing something about it, it's kind of in reverse. You just have to start with not panicking. And sometimes, like I've said on this show, I'm not the person out there that's going to tell you that everybody should be an investor. No, that's not the case. In fact, I think it would be good, especially when we're talking about different a wealth expanse. There's, what do you call that? What's in the news now where they're saying that the middle class is becoming further disconnected from the extremely wealthy. You know what I mean?
Okay.
Well,
like a
wealth gap, income gap, or whatever.
Oh, okay.
Yeah,
wealth gap.
Yeah. So, and that does occur in economies. You're going to have ebbs and flows. I would be completely okay with if the government or different companies, or if there was more talk about how to get people their retirement money a little bit more guaranteed instead of less focused on the stock market, because stock market's emotional. and they're never going to do well at it. And you know what I mean? Mm-hmm. That's just the fact that people's emotions get the best of them. It's perfect for my industry, but it's not so. Sometimes it's not so perfect for the end user. Like I've said it before many times. Go to 10 people on the street, ask them if they want a monthly pension when they don't work anymore, or a 401k account that they need to do something with. I would imagine that most of them will say they'd like the monthly pension.
Well, yeah, because you mentioned, oh, you got to deal with some 401k stuff. Okay, now I got to deal with a lot of numbers. I got to deal with a lot of people that I probably don't understand what they're saying.
And I don't trust.
Yeah.
And all that. Yeah. So, comfort, repetitive explanation, repetitive understanding, that's what I try to use as a bridge to get you, the listener, and any client through that weak time. That weak time may be the times of when you're thinking, oh, maybe there's something else. Maybe there's a different way. The times of when even more, guess what, information makes it worse, makes you weaker. When you have a down market, what do all the news outlets on the internet, radio, and TV talk about? The down market. How much worse it could be. How much worse it might be. That's what they all do. Nobody out there is going to say, you know, you being a human, it's going to feel worse than it really is, because guess what? People, when they lose money, it feels more than twice as bad as it feels good when they do make money.
Yeah, I can see that, because it's almost like a personal thing. Like, I lost money, it's somebody's fault, but if I gained money, I'm pretty smart.
Mm-hmm. Any different connotation that you want to put on it, it's just the way it is. It feels way worse to lose money than to make money. I know that's the case. That's how come I keep trying to hammer on, things that are simple to grasp, because they're easy to grasp and they're also powerful. I was talking to a client where he's married. Both husband and wife are clients. They're completely different emotionally. The prices on the statements, the prices of the investments going up and down drive the wife crazy. The prices going up and down for the husband don't drive him crazy at all. And he even was trying to explain to his wife, and we were talking about this, he says, I just don't know what gets her goat. He says she continuously concentrates on the value of the statement that comes every month. And I tell her, who gives a shit what that statement is? He says, look at the companies and look at these dividends that I'm getting no matter what. He says, skip the price. Just look at the dividends that I'm getting. The prices end up to be going upwards over long periods of time. But any few months, any 1 year period, look at the dividends. Every single one of these companies is paying me X amount. That isn't changing. The price per share is changing a whole bunch, but I don't really care because I'm not really trying to buy or sell anything. But look at these dividends, honey. She won't make that mental jump.
It's probably going to get wrapped in the mouth for this, but it reminds me of, like, if that were a kid playing on the playground and the mom's like, oh, careful, the monkey bars, and the dad just like, let him put a nickel in the socket. He's not going to learn if he doesn't do that, so just go ahead and let him do it.
Well, kind of. Yeah, it's...
one's kind of more babying it, and the other's like, just let him be, and then it'll figure it out for itself.
Yeah, but you want to, I'm trying to get people to have good outcomes. So there's sometimes that if they put the nickel in the socket, they'll never go back again. And
that just weeds them out.
Yeah, nice. I think we've switched roles on today's show. Chris is now the Army drill instructor, and I'm the dope smoking hippie in the VW van.
Trying to calm me down.
Yeah. So. Maybe try to think of this when you're an investor. Maybe think of a different investment that you can see or touch. Let's imagine that you've got a house that's a rental, and you've had it for 10 years, and that your rental, let's say that your rental income that you get from it is double what the mortgage payment is. Okay? So that's a lot of positive cash flow. So what are you, the investor, going to concentrate on? Are you going to concentrate on are you going to get a house appraisal every 6 months so you know what the house is maybe worth on the market?
That seems like a lot of work.
Well, why? Why would you want to? Why is what the total value of the house so important? Why is it so important when your income from the house is double what you need to pay for the house?
It just seems like you're more nosy, like, I don't know. I just got to make sure I'm above everybody else.
Maybe, or
in the neighborhood.
You're trying to get reassured in some way. That's what it's like when people are concentrating with me. What they're concentrating on the value of the statement rather than the whole entire picture. Because that appraisal, if you go and appraise your rental property every 6 months, there's going to be some times where it changes maybe more than you would think. Are you going to act on that? Even when your income is double what your expenses are? And by the way, double your expenses, pretty soon that house is going to be paid off free and clear. So then 100% of the rental income is going to be going into your pocket. Why would you ever think of selling something like that? And to me, when you have an investment, let's say company XYZ, let's say a client's owned it for 15 years, and now the dividend that they get every single year is worth about 50 to 60% of the original purchase price. So the amount that they put in, let's say they put 10 grand into this company XYZ. Now it's 15 years later. Now they're getting $4,000, $5,000, $6,000 a year from that investment. Why would you consider selling it? Because the value, the 10 grand that you put in there, is fluctuating. Now your 10 grand is 20, and then it drops to 15, and then it goes up to 25, and then it goes down to 18, then it goes up to 30, down to 20 again, down to 18. Why would you concentrate on that price fluctuation solely and ignore the other part? I'm not saying that it's not important, that the price fluctuation is not important to you emotionally. But mathematically, when you've owned the sucker for 15 years and you're getting 40% of your original purchase price back in dividends every single year, well, stop me, but the simple math tells me that you've already got all of your original investment out of that investment, all of your original money back out of the investment, just from the dividends being paid over 15 years. You got it all back. Well, then what in the hell are you worried about? But here's the thing. Getting to that 15-year point is completely key, or getting to the 10-year point. When you're when you're just talking in the 2 years, there hasn't been enough improvement in 2 years to tell somebody, to give them enough reassurance. And if there has been a huge growth, we all know it's luck. You know what I mean?
Yeah.
It's not really repeatable. You were going to say something.
I think it just goes back to us never wanting to be screwed. Like if you get $100 out of it, I could have got 101.
The fear of losing out.
Yeah, always.
Yeah.
No matter if you got $1 billion out of it, but I could have got $1 billion in one.
Yeah, the fear of losing out. And then if we were in a different emotional state, we could easily talk about the fear. I put in 10 grand, but now it's down to 6 or 5, and if it keeps going down, then it's only going to be 4,000, and I put in 10. And if it keeps going down, then it's going to be 3. It just makes it worse. And when you have the internet, and when people don't even talk hardly to each other face to face anymore, when it's all over the internet, when you can't hear voice inflection, when you can't differentiate a reassuring tone from a sarcastic tone.
Or when you see somebody else making that might be a little more than you.
Yeah. You're left in your own emotional juices to stew, and that makes it even worse. So,
by the way, come to State Line and see my new band, Emotional Juices.
So, I mean, it makes it even worse. People just sitting and stewing in their own, whatever. Their humanistic tendencies are going to pop up even stronger, which means they're going to get fearful and want to panic out, or the fear of losing out and panic in. That's the one key issue of the entire investment world, and we could spend a decade on that, and it would be not too much time spent on it because it's the one key issue. But I'm not enough of a psychologist to be able to do a decade's worth of work on that and have it even be remotely interesting or listenable. So with that, that's the end of everything that I have to talk about. What about you, Chris?
That's it for me.
That's it for you?
Come on, if you got kids, Lilac City Comic-Con is June 1st and 2nd. I'll be hosting the costume contest, and I'll also be playing a game called Win My Stuff.
Oh.
Where I have a bunch of stuff from the house of toys and stuff that I'm done playing with. So I will bring people on the stage, test their pop culture knowledge, and they can win my stuff.
Chris is pretty fun. You might want to consider doing that.
It's like Win Ben Stein's money, but much more nerdy.
Okay, well, cool. Well, anyway, thanks for listening to the show, everybody. And we'll be back again next week, maybe same place, same time.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.